What's up guys, welcome back to the channel. Firstly, my apologies for being absent for so long, just been dealing with some stuff. Nonetheless, I'm very happy to be back and I'm excited to share the last of our videos, our individual videos. Today we'll be covering the Fibonacci. This is an amazing tool guys, and once you've mapped it, it will change your trading game forever. So following this video, what I'll be doing is a confluence video. What that means is I'm going to basically show all the tools that I've showed in individual videos into one video. Right? So I'm going to show you guys how all those little tools we've been using in the previous videos, how to stitch them all together to come to one conclusion. Right? I'm very excited to share that video, as that will then sort of usher in a period where I start sharing my strategies with you guys, some extra tools in between that can be used. Probably having a couple of guest speakers come in. I'll talk around charts. As usual, we'll still be doing the market outlook, that's a given. But let's not waste too much time on explaining what's to come, because we're quite excited to share it individually and surprise you guys with some goodies. So without further ado, let's get moving more than average. What's up guys, welcome back to the channel. So Fibonacci. So simply put, the Fibonacci is a tool that is used in most cases to mark off support and resistance within a chart. It's done automatically when you're setting it up in a specific way. These mark off key areas on your chart that you are welcome to seek entries from. So ideally what this is it's kind of something to make you catch a cleaner entry, and it could also allow you to take a lot earlier entries without getting stopped out unnecessarily. The other thing we use Fibonacci for is I also personally use it to seek targets, and I'm going to show you guys how we go about seeking those targets using the Fibonacci tool. It's a very simple tool. The only thing is you need to take note of what are the key elements of the Fibonacci? What are the key levels that you want to take note of, right? So I'm just going to quickly mark this off here just so that I don't lose it, because I want to show you guys this move, right? But I'm going to go to the top of the chart. So I'm going to open up a Fibonacci for you guys now, right? As you can see, my Fibonacci levels are kind of normal, like every other ordinary one. The main ones that you need to take into consideration here are the 78.6, the 61.8, the 50, the 38.2. These are the levels that we look for the market to break through and come down and retest on, right? With these, we consider retesting points. So the market will essentially say, for example, the market was coming up, right? Oops, not that one. Sorry, guys. Let's say the market comes up, and now we wait. Now the market decides, hey, it needs to take a breather and it needs to come to the downside. Then we wanted to retest on one of these levels here, right? The minute that retest takes place, we wait for a confirmation candle, and that's when we get in. Now, let me show you guys how that's done on a chart. Okay? This won't be a very long video, guys, because there's another Fibonacci tool that I'd like to show you guys, but that will come in a later video. So for the purposes of this video, I'm going to show you how to identify a buy entry and how to identify a sell entry using your Fibonacci tool. So when we're looking at the Nasdaq here on the 4-hour chart, we can see a little bit of a range took place here. Then eventually the market broke to the downside. Then we had a nice strong bullish engulfing candle. This is, as you guys should know, a bullish engulfing is normally an indication to us that the market will be changing direction. Not always, but it's a good indication to us that the market will now be gaining some kind of momentum. As you can see in the chart, it obviously did gain momentum, right? Sorry guys. Then what we would do is, if we go up here and now we're saying to ourselves, okay, cool, we want to catch an entry, we want to take a buy, we're not sure where our targets are going to be, you know, etc. The usual. What you do is, on a buy trend, so on an uptrend, you take it from the swing low to the swing high, right? And what this does for you is, it marks off your areas of interest for you. So you see the market came up, it came down and retested the 50% Fibonacci level, and then the market shot up. So what you're going to do here is you're going to say, so you get the retest of the 50, there it came back up, with 50, there it came back. You wait for your confirmation candle. You don't necessarily always have to wait for this bar to close, right? Once the bullish, you can go obviously on the lower time frame and wait for confirmation of a bullish candle. So if I were to go to H1, for example, just zoom out here, right? And I go to a H1, right? Here that's the bullish engulfing candle. Here the market came down. We tested. That was not clear enough confirmation for us. The market then rallied to the downside again, tested the 50 again. Here is where you could have entered. The minute this bullish candle came into play, you could have taken that trade there. Now, where would your targets be? Let's start there. Your targets would be the minus 27 and the minus 61.8, right? So in an ideal world, what this would look like is this. So we got that confirmation candle. We take the very next one. Your target is all the way. You have a choice. You can target the minus 27. I personally, in this instance, because the price action is better at the top, I would have targeted the minus 61.8. And then with my stop loss being just below the 61.8 here because of the wick over here. So ideally, like as always, you want to put your stop losses just below a support area. And if the 61.8 is a valid support area, I mean, guys, like because it's broke off the 50, you could probably just put it up there. But for the safety sake, you want to put a little bit underneath this wick area here. And then that's how you would have caught that entire buy. So you would have been in from here and you would have caught this whole move. Now, just one thing to take into account with the Fibonacci, right? You didn't necessarily have to end off there once it hit that take profit. Now, once we retested the second time, right? You could have done this from your swing low to your next swing high, and you could have targeted more, and so you could have gone on. But you see how close it got. So if we just that original entry wouldn't have worked. So if we went back to our original entry, as you can see, that 61 minus 61.8 up here was a perfect area for us to be closing off of. Because think about it, okay, granted you could have caught a couple of more pips coming up here, but then you would get caught stuck straight into a range, right? So that's how you'd use a buy. So every time you see the market change direction, like slightly, bearish candle, you'd switch over. And that would be how you take a buy. So to recap on the buy side of things, you're looking for a bounce of either the 78.6, 61.8, 50 or 38.2. I personally don't take any other trades off other lines. Those are the lines I take. Important to note with Fibonacci is that they must coincide with your current support and resistance levels, right? They're not a must, it's kind of like it's added confidence. So my recommendation is first plot your support and resistance lines and then pull out your Fibonacci to catch entries. If the Fibonacci levels meet your support and resistance lines, that's called confluence, guys, right? So what I would like for you guys to do is practice. Practice, practice, practice. Fibonacci is not something you don't master it in one day. You need to get comfortable with it. You need to have patience with it. You need to wait for proper confirmations. It's a very intricate tool, but once you knack it, it will change your trading game forever, man. Yeah. I mean, you could catch clean entries. I mean, imagine taking that, right, and having a trade even like this. Oopsie. Even like this. There's your entry candle, right? And having a trade like that, that's really good. A 2 to 16 is reward. Easy. That's chips, guys. So that's the buy side of things. I'm going to take you guys through the sell side now. So the market rallied upward, rallied upward, rallied upward. Here we made a lower high, right? That was our first indication. Now we saw the market dropped. There's your breaking structure, right? So it formed a lower low. The minute that lower low came into play, this is an indication to you that we could potentially be seeking a sell. So what do you wait for next? A retrace. 1, 2, 3 candles, right? So guys, like here, the minute it fell down, we don't enter here, right? That's just silly. We wait for a retest. Here's your retest area. So the minute this bullish candle formed, right? That's your key to pull out your Fibonacci. You pull your Fib from the swing high, see the opposite of the buy now, to the swing low, right? There's you in, and then what you do is you wait for your confirmation candle, which is this one, right? Once this confirmed and closed like that, the very next candle is your entry, right? So your entry would have been about here, right? Your stop loss would have been up here. Let me just put this thing out. Your stop loss would have been there. So your entry is here. Your stop loss is over here. And once again, I would once again have targeted the minus 61.8, right? So as you can see, guys, on a Fibonacci, what you need to do is you always need to wait for a retest and a confirmation, right? In this instance, the risk reward could be better just because the candle's a little bit aggressive, the wick was a little bit aggressive, so I kind of gave too much body. However, with that being said, in combination with all the other things I've shown you, there was a good possibility that you would have taken the trade from up here, or even while this candle was going, if you scaled to a lower time frame, right? So let's go look. What did we see? Right? So now we go down, we go down, we go down, right? So here we have a test of the 61.8. There's your bearish confirmation candle. You get in from here, right? Your risk reward now goes like this. Your entry is up here, beautiful. Your entry is up here. You can just put it just above that 78.6, right? And you run it all the way down to the 61.8, minus 61.8. Look, in an ideal world, if your momentum was the way it was, you probably could catch the trade a little bit further down. However, for the sake of this video, that's what I recommend. Literally, when you get your rejection and the candle confirms bearish off of one of these fib levels, I say it again, 78.6, 61.8, 50 and 38.2. If you get a rejection off that area and you are in the trend, never go against the trend. If you are in a downward trend, you can catch the move. Let it bounce off, confirm. So on a downward trend, confirm a bearish candle. On an upward trend, confirm a bullish candle. Those are key elements of using Fibonacci. So, what did we learn about Fib today? Right? So, what we've learned was the 78.6, the 61.8, the 50, and the 38.2 are your major areas. Right? These over here. We look for bounces and then a confirmation candle to take those entries. Right? Second, what did we learn? We can use the minus 27 and the minus 61.8 for our target areas. Now guys, to put this in here, I just want to show you guys, I want to actually go into the properties and I will pause the video so that you guys can actually see my settings in my Fibonacci. So I'll hold the video out here and you guys can just take your time to kind of watch and make sure your lines are the same as mine. Make sure they're in the same places as mine. One thing you'll also notice is that I don't use the 23.6. Right? It's for me personally, it's just not a strong enough trend to go upward. Right? Everybody have that? So I just want to cover key aspects of the Fibonacci. Right? Just things I want you guys to note because these are things that will help you make educated decisions. Right? So the 38.2 is indicative of a strong trend. The 50 is a normal trend, right? So what that means is essentially a strong trend means like a hard aggressive move tends to come off of the 38.2. The 50 is like normal, so it will be a stable move upward. The 61.8 is considered a little bit of a medium where it can be aggressive. It's considered the golden number and it normally gives you the best kind of move, right? And then we have the 78.6, which is a weak trend. Now, just because it's a weak trend, it's not necessarily something that you should be ignoring. Recently, I've noticed that Nasdaq tends to nick that line a lot more often than usual, especially on the 4-hour time frame. Another aspect of this Fibonacci is take note of your 100 level and your 0 level. In terms of the 0 level, this by some traders is also used as target 1, so i.e. target 1, 2, 3, right? And then we have the 100, where if your Fibonacci breaks, if your charts break your 100 Fibonacci level, 100% Fibonacci level, this refers to a break in structure, and this is a good possibility that the market will reverse direction, right? Those are major aspects of Fibonacci that you must take into account. Now guys, combined with other strategies, right? Combined with other things, Fibonacci can be a monster. Like, you could catch manic entries off of a Fibonacci and having things like, for example, here, let's just put this out quickly, right? And maybe we wanted to catch that buy. So now the 61.8 is telling us this, okay, cool, we see a 38.2 here, right? A 50% first, and then we get a 38.2 rejection. That's totally fine. Now, I'm just going to put in my standard MAs over here, right? Now watch what takes place in that same area, guys. Here we came up, we got a 38.2, a 50% rejection with a crossover, right? They converged. It came to test the 38.2, and with that moving average gone, we flew, right? This is also a great indication to us. The minute they crossed over and they were widening like that, that we could catch a buy. Yes, they tightened a little bit here, but they didn't cross back over. So you would have been able to catch that entire move to the top side with the Fibonacci along with that. Obviously, other elements that you should be using are things like support and resistance lines. You should be using your trend lines. You should be using your RSI. And guys, these are all videos that I've covered in the past. Please feel free to go have a look at them. They will paint a picture for you, right? So this is the last of the videos of the trading tools that I'll be sharing. The next video that I'll be uploading is basically stitching everything together. So I'm going to do like a conference video for everybody where I use all the trading tools that I've covered over the series, and then we're going to stitch it all together, and I'm going to show you guys how each thing shows you the same thing. And that will be the conference video. I'm quite excited to share this one with you because this is the one that's actually going to change the way you see the trading. And that's it for Fibonacci for now, guys. Look out for the extension tool. The extension tool will be covered in the conference video because it's not something I'm going to go too in depth with, because Fibonacci does it for most traders, especially if you're a beginner. So I hope you guys enjoyed the video. If you did, please remember to click the like and subscribe button below. And without further ado, keep it moving more than average, guys.